Happy Taco Tuesday, everybody. Welcome to the TraderMerlin show. Hope you had a great session out there, unless you're holding those cryptos. The sell-off is real, folks. It's funny watching the diamond hand people unloading cryptos right now, which is fine. We'll get our day in the sun once again at some point. We'll talk about a little bit about cryptos near the end today, but today's topic is actually led from a viewer who's been sending me all kinds of great questions, which is awesome because you're giving me a lot of show topics to discuss now that I don't have a guest on the program every single day, which was a rather common one in the marketplace, which is this. The lead dogs of the market. I hope you enjoy my graphic there. And yes, I never did a shout out this morning. Hello, everybody. Vernon, good to have you with us. Chuck, Jerry, Pepe, Tomasina, Tom, Big Ab, Sue, Les Gold. You guys sweltering out there on the East Coast and in Scottsdale, huh? It's nice here. I think we're at, 70 degrees in Southern California. It's perfect. That's why we pay the extra money. All right. I hope you enjoy the graphic here. I was really kind of having fun with it. I put Powell's face on the sledsman here, and then all the dogs have different market indexes, and I was joking because the one in the back there looks like this just a horrible dog, like he's just dragging everybody down, and that's AMC in the very back there. But we always hear the phrases, oh, such and such is leading the market, or this market's leading this, and it gets thrown around a lot, and a lot of times people are incorrect at the time of making that statement, and I guess it's all relative to the time frame that someone is referencing. So I'll leave it to you guys to type in a chat here. I'm curious. Since the beginning of the year, no cheating, no going and looking now. I'm just curious to see which sector do you think is leading the market right now, starting from January 1st of this year. Now, to put it into perspective, there's really 11 different sectors. You've got, let me see if I can remember, you've got technology, healthcare, financials, discretionary, consumer discretionary, consumer services, industrial staples, energy, utilities, real estate, and basic materials. So what do you think is leading this year, right? We hear so much about technology leading, right? Oh, technology this, technology that. Okay, well, maybe. I'll tell you, if you type in technology, you're probably wrong, okay? Most people are still in the mindset that it's technology leading, but we talked about that a while back, kind of rotating out. The great news is you guys are all on it because XLE is the best sector by a long shot. It's not even close. Some saying technology. And Serge, I love that you put Dow Jones. That's not really a sector, but it's a market, right? And if you look at the Dow Jones, there's a lot of energy companies in the Dow Jones. So that's part of the reason I think you're seeing the Dow take off so much. No, not retail, Tomasina. And I'll do you guys a little example here. I talked about this one on previous shows where we look at a market comparison. Now, I use TradeStation, but it's just because it's a legacy for me. So what I have is this over here, and I'll show you guys. I went in and I programmed in all the different sectors, and this is really going to January 1st of this year. Now, of course, we could take a look at different time snippets, right? If you go back the last 2 years, yeah, it's no longer energy. Energy is actually one of the worst. But what's interesting about that is it shows a rotation. It shows a shift, a fundamental change in the characteristics of what's driving that market. So on this chart here, I know you see a bunch of squiggly lines. It'd be nice if they labeled them better, but energy is this one that since the beginning of the year is up roughly 48%. Now, to put that in perspective, the S&P 500 is this black line here. It's only up 14%. So clearly, yes, Serge says crypto. Not since the beginning of the year now. we might be down on the year if we go to January 1st. I'll check out that in a second. But clearly, energy is just blowing the doors off the market. And then you can take a peek at the second one right here, which should surprise a lot of people, is financials. And financials were one that, if you go back a year or so, they were pretty beaten up. They weren't looking so good. So what we're seeing right now, in my opinion, you guys may have a difference of opinion, that's fine, is we're seeing that rotation, a change in leadership, if you will, of those specific indexes. And kind of what does that mean? So we'll address that. The question that this all stemmed from was this one here. Since technology is leading the market higher, can you do a show where you break down that sector? Okay. What's that at the bottom? You mean FX? You're talking about these last two down here, like which were the worst performing? Let's see. It should be utilities, consumer staples, XLP, and what's that? It should be utilities. Yeah, and XLU is utilities. So those are the two worst. They're still up 6% since the beginning of the year. So pretty much everything is looking great since the beginning of the year. But, there's obviously grades to that. If you're talking 6% for the year, most years you're thinking that's great. But compared to the S&P, which is at 14.5, you'd be going, oh, I'm not doing so well with only 6%. Then, of course, you got energy up almost 48. You got financials up 31%. And then you have, I believe this is semiconductors, which have weakened a little bit, obviously, at 21. Let me make sure that's semiconductors. Yep, no, that's industrials, XLI, industrials. So, I have to check that out, Big Ab. I think we've corrected so much. But yeah, you're probably right. Remember that most of the gains happened early on, so I'll have to check that one out. All right. Let's see. Keep going here. So when you break down that sector, so there's the first misconception here is that technology is leading. And maybe, Lee, you're looking at a longer time frame. So if I were to zoom out and let's say 2 years, so let me go back here and go to the 1st of 2020, and I'll do an anchor point right here. And you guys can see that we calculate from that bar that this guy right here, which is most likely going to be the semiconductors, is number 1. Then in blue, you have technology, and then you have the S&P. So energy is way down here at the bottom. If you go since January 1st of 2020, energy is down 7.5%. So yes, it is in that time frame the weakest. But I'll be honest, for me, I'm not concerned about that time frame. I'm concerned about what is it doing now. And what's really interesting is how quickly we've seen this accelerated move. It really happened right around November 1st. You guys can see where I have my cursor here. I'll put a vertical line on that one just for emphasis. Right around November of last year, that's when everything bottomed and had a nice little rip, right? Right around Halloween, end of October, it bottomed and then started to rip. But the acceleration of move that came out of energy, it's much, much stronger. I'll see if I don't know if it'll let me do this on this bad boy. From November 1st to where we are right now, energy, no, that's weird. It's a backwards number. No chart showing? You guys have a chart, right? I'm hoping you have a chart showing. I see a chart. I think we got a chart. I'm seeing it. It's going through on the feed, so hopefully you still have a chart here. All right, so I'm going to kind of do what Lee was asking about because I'm always been a fan of kind of starting big picture, especially when you're looking long term. And a lot of the swing trades I've been making recently have been in that energy space just because it has been one of the stronger sectors out there, especially since we've had that break on crude oil. It just kind of led me to believe we'll see bigger moves in those markets, and that's been good. Okay, cool. We do have charts. So what I'll do is, for Lee, I'm not going to go into technology because that's not the leading sector in my opinion right now, according to the charts and based off of January 1st of 2021, it's energy. So for everybody out there, I don't know if a lot of people do this. I enjoy doing it. It's kind of fun to get to understand the markets and how they interact. What I did is I went out to bar chart, and I'll show you that right now. Here you go. So bar chart, and there's a lot of different resources out there to find this information, but bar chart I just found to be very simple and easy. There's no plug there. I know we talked with John Rowland, who teaches classes for bar chart, but I'm not getting paid by anybody, so don't take these as paid endorsements. So what you can do is you type in any ETF. So Lee, if you wanted to look at technology, you can simply type in XLK. I've done XLE over here, which is energy, and then I scroll down and you type in click on constituents, and it will bring up kind of the leaders, all the components of that index. Now, if you sign up, you can download 5 things per day from bar chart, which is plenty for me. So in this case, I just downloaded the list here of components of XLE. Now, what I want you to notice here, this is important as well when you're looking, I zoomed in here for you. When you're looking at these market indexes and strength within a sector and kind of how the index itself is the composition of that index is, look at the top 2 components here. Everything else is like 5%, 4%, 3%, and then all of a sudden these top 2, Chevron and ExxonMobil, over 20% each. So to me, that's a little bit of a skewed weighting. It's kind of like looking at the dollar index and realizing that over 50% of the dollar index is in the euro. You notice that the NASDAQ is top heavy really to about 5 different companies. So it's important to know that this one definitely is biased, right? 40% of the over 40% of the portfolio relies on just 2 companies. That's ExxonMobil and Chevron. Now that doesn't, break down the value of this ETF at all. It's just, you got to know that it's kind of biased. So what I like to do is I will drop that into my platform, and I'll go here to TradeStation. We can do it on others as well. And I'll go to this one. And I made a tab down here at the bottom, just XLE. So I copied that list of ticker symbols, and I just simply dropped them in here. And right now, it looks like there's 22 components of XLE. Now, normally what I do is I do two things. I do a side-by-side chart comparison so I can see the strength. And let me just copy this chart here. And I'll paste it right there. And we'll make the top one fixed. We'll make that XLE. And the reason I'm doing that is just simply to look at relative strength. The other way that I can do it is I can add it to the symbol list. And then I can sort. So bottom line, right now I've sorted by Bollinger percent B, which tells me how much things are above or below that upper Bollinger Band. Or are they above or below the Bollinger Bands? Right now, this is very near the top. If you look at XLE, it's 94%, which means it's almost at the upper part of the Bollinger Band. Now, for me, a sign of relative strength is how is the rest of the peer group doing? As you guys can see, we've got 7 companies right here. 1, 2, 3, 4, 5, 6, 7 that are above the XLE according to on Bollinger's, which means that right now they're trending stronger. And then you could look at XOM and lower. These right here are all weaker than the ETF. Can you paste the URL for the bar chart link? Sure, I can do that. Let me real quickly bring that up for you guys. Bar chart. And there you go. So with regards to bar chart, again, I think you have to sign up. It's free. You don't necessarily have to pay for anything. And that will allow you to download the constituents. You can pull up all the information for free if you just want to look at it. But for me, I like to download these things and then copy and paste them and put them into the applications that I'm using. In this case, we're looking at TradeStation for that one. So now the fun part and the easy part for me is just to simply run through the list. And if I'm looking at something, I'm looking for that relative strength or that relative weakness, right? So right now, OKE, which you can see is at 107, which means it's above its upper Bollinger Band. If I'm looking at going long, this would be probably one of the best candidates because it has just been the strongest compared to XLE. It really hasn't had any pullbacks. You saw one back in January, but really nothing major at all, and it's just been drifting up higher and higher and higher, while you can see that on the top chart, which is the XLE Energy ETF, it had a nice pullback starting in March, right? It fell to the tune of, XLE dropped from peak to trough roughly 16%, whereas OKE didn't drop at all, really just kept going up. So then you have FANG, which no is not a FANG stock. That's Diamondback Energy. It's another one that people always get confused. That one always cracks me up. That one performing also very well. The only challenge I see with this one is it really has been sideways for the better part of 3 months. Now, so has XLE, but XLE broke above those highs. So to me, XLE is on a retest right now of this most recent breakout, as you can see on the top of the chart here. So that's the first one that I would be looking at is OKE. Second was FANG, which is not the best. Now, let's go continue further. You know, as I go down here, there's going to be some that I find to be much more attractive and others I look and go, you know, like WMB, all right, Williams. Right now, I don't want to buy it, but it's been looking much stronger than the XLE ETF. Now, granted, it's probably a small weighted component of the index, but nonetheless, it's still looking very strong, and that may be, again, another one that looks like a potential long opportunity. So, again, I don't want to go too long on this, and if you guys have questions, feel free to send them on in. I saw a comment come in here from, what was that from? Jimmy T. Says OIH premium is good too. Yeah, there's a lot of different ETFs out there that represent the market index, right? So I'm using the ones that they're the spiders, right? That's kind of the standard measurement, but you could easily replace XLE with OIH. It's going to be a little bit more focused, and just to show you that one, let's go and bring it up here and do it live for you. So let's go here. I'm going to zoom out just a hair and go to OIH. All right, so Van X Oil Services. Okay, so now it's going to show me all the constituents of it. And you notice there's already different names. This is going to be not in your Chevrons and your Exxons, but more in the extractors, the equipment, services side of things. So again, this market can be fragmented in multiple ways. And this is very similar to what we just saw. You guys notice the top two there are Halliburton and Schlumberger. Schlumberger 22% of the ETF, and Halliburton's running in at 13%. After that, it's like 5% and lower. So it's usually these guys are very weighted in one portfolio or in one or two companies, but that's why it's always important for me to check what the holdings are, especially if I'm looking at the ETFs going forward. What about finding the laggards? Oh, well, that's easy. All right, so if I go out of here and go back to this list, these ones down here near the bottom, especially Cabot Oil and Gas, COG, is the big laggard. You can see right now it's got a 44% on the percent B, which basically means Bollinger Bands, it's near the bottom end of the range. It's less than halfway. And right now, being one of the strongest sectors, you would expect everything in here to be above 50. But there's one just dog in this, and that's COG right now. Why? I don't know. Could be the fundamentals, could be the management. I don't want to waste my time going to find out those details. But right now, it is it's looking weaker and weaker. It actually, if you notice this price chart, guys, this is it's starting to form, to me, a descending triangle. It's making lower highs, and it's basically making the same low right around 16 bucks. So to me, there could be a nice opportunity here for a short trade on this if it gets below 16. But again, shorting a $16 stock is rather risky. Okay, so that's how I'd be going through there, Fink, and looking for laggards. I'm looking for two things. I'm looking for overall price patterns that just don't match the market. So let me line these up so they are the same time frame. So these are the exact same time frame, top and bottom charts. Top one's energy, and the bottom one is going to be the individual stocks. Out of this list, I mean, we can run through here real quick, and I'll show you how quick I do it. Oh God, this looks great too. Hess looks phenomenal. I mean, you're at all-time, I don't know if at all-time highs, but it's just been really, really strong. Nice bullish play. I'll just flip through and see. I'm going to look for weakness ones, right, Fink? You asked about laggards. I just simply go through here and see which one looks weaker than the overall market picture. Because if the market rolls over, I think you got a nice double top on PXD. That's Pioneer Natural Resources. You got a double top actually just formed in the last couple days and got three small little doji kind of formations in the last 3 days. So this might be something to watch for a potential short if energy can roll over a little bit. Is this really a live? Is this really a live stream? Seems kind of fake. Yeah, it's fake, buddy. Thanks, Gregory. Are you a shill? Did you come over from the Sidon Strategies or whatever the hell he's calling a stupid trading school now? Are you a shill? Is that what that is? Yeah. It seems fake. Love it. So I'll keep going through. Devon Energy. None of these are actually looking like laggards, I'll be honest. They all pretty much are following suit with XLE. But none of them just scream at me of weakness. Okay, NOV, which you would expect that because I'm already near the bottom end of the list. NOV looks pretty weak. I would also say NOV looks great as a potential short double top as well, like we just saw on, PXD. You have KMI, Kinder Morgan. Kinder Morgan, even though it's showing near the bottom end of this list, it actually looks relatively strong. Now, the reason being, notice the hard red edge. All right, you've got this basically making higher highs, higher lows. It had a pullback, but this is an ascending triangle. This is just primed for a breakout on KMI, on Kinder Morgan. The only thing that makes me nervous is it's already moved up so much, right? It moved up a ton since November of last year, but that doesn't mean that this run is over. I mean, oil, I think oil is going to be kissing 100 here soon the way it's moving. It looks great. Okay. And I think I had one more on this list after Kinder Morgan, and that's BKR. So as I look through these, there's not a lot of real separation. I think the interesting thing is they almost all look the same. They're all relatively the same, except for Cabot Oil and Gas, COG. If I was to be looking for a shorting opportunity, Fink, I probably wouldn't be looking at energy, right? Remember, your odds, and if we look at what our goal is, it's to make money. And the odds of me finding a strong short play in the strongest sector is not good odds, right? I'm trying to find the weakest, something that's going to give me a good opportunity down when it's the strongest sector. That's not a good recipe. So what could we do? If you're looking for potential shorting opportunities, you find things that might be overall weak right now. And to do that, and by the way, for those that don't have TradeStation or a paid platform, you can use something like, this is stockcharts.com. So what I did is I put in those 11 ETFs that represent the market, and you can drop those all in, and then you can go through here and see over the, whatever time frame you want, which one's been the best performer. It's an awesome feature. I really, really like this in bar chart, and the price is absolutely right. So if we look at to January 1st, this right here, you got consumer discretionary. You also have healthcare has been pretty weak, and technology. So let's just go look at healthcare, right? Let's go look at healthcare ETF, and see if we can find something worthy in there. I'll do the same process, XLV. Okay, so there's our healthcare ETF. Here's the constituents of it. This I like better. It seems to be a little bit more balanced. There's nothing over 10%. Johnson & Johnson's number 1. United Health Group number 2. Pfizer. So a lot of notable names here. I agree, Greg. I don't know if it's the best move, but I think it's a good move. I think buying commodities, going to silver, gold, I think is probably a wise choice. Certainly not to put your whole portfolio in there, but I would be hedging some diversification in those areas. As inflation, I personally believe, is going to start to really become an issue going forward, even though the Fed calls it transient. I call BS. All right, so I downloaded this XLV. Now, you could go and type in all these symbols manually if you want, but I'm too lazy. So I'm going to open up the Excel spreadsheet here. I'm going to select all of the different, there's a lot in here. Woo. I'm going to select all the different ETF or stocks, copy those, and we'll go over here and put those in TradeStation. So I'm going to just delete all these just because it's easy. Okay, so Control A, delete, Control V. All right, so now I've put in all the healthcare ETF or healthcare stocks, right? So boom, I've got all of those in there. There's 64 because you have XLV is the index itself, right? So let me just sort these, and you'll notice I'm getting a much greater spread here of ones that are really strong versus ones that are really weak. And what I mean by that is let's find XLV on this list. XLV is right here, number 37, meaning it's very low. XLV has been trending down. It's near the lower end of its lower Bollinger Band, but look at all these ones below it, right? You have all of these are very, very weak. Even these two down here, CI is outside its lower Bollinger Band. That's very oversold. Not to say that it's not going to bounce back up, but it's very oversold and outside. So let me go XLV on the top, XLV, and then let's just try CI. Yeah, there you go. This thing's just been rolling over. No surprise there. That's near that lower end of its Bollinger Band. Now the question becomes here, since it is in an uptrend since November of last year, is this an opportunity to be buying the dips, or do you just play this as a potential short and look for that weakness and go short it like Fink was looking for, right? What else do we have? If I go up here and look at some of the stronger ones, I don't know why I have all these lines on. I did these lines a long time ago. Oh, Biogen, BIIB. Gotta love Biogen. Obviously, it's going to be stuck near the upper end of its Bollinger Band because of what happened 2 days ago. Just a huge move to the upside, but you got Eli Lilly. If I'm looking for shorting opportunities, these are not the plays I'm looking to make with these the big gainers. I'm going to be looking for the weaker ones. So I would flip this upside down and be looking for the negatives or ones near the lower end of its Bollinger Band because I'm looking for the trend. Trend to me is probably the most important piece. Now, if you look at LH, I actually really like this chart from a bearish perspective. We have been slowly starting to make lower lows. We're making lower highs, and all of a sudden things are getting better and better from a short perspective for LH. Don't even know the ticker symbol, guys. I've never traded. Laboratory Corp America Holdings. Never been traded in my book, but it looks like it's rolled over. Right? You guys can see that here. It's showing weakness compared to the XLV ETF, which has been sideways for about a month and a half. And all of a sudden, LH making lower lows, lower highs. And what's noteworthy here, see these red candles starting since May? The green ones are really small, but the red ones are really big. That tells you emotion and momentum is on that side. Okay? That's actually a pretty good opportunity here for the short side. But, for me, I can't trade any of these because one of my rules is no healthcare, drug stocks, pharmaceuticals. I just got to stay away from them because of what happened to me in the past. So Fink, I don't know if I covered your question, but that's kind of how I'd be looking at it. I'm looking for ones that are relatively weak compared to right now. And LH probably was the best candidate we've seen so far running through this list very, very quickly. I did stock chart XLRE 1 month. Yeah, XLRE is, a lot of people like to use IYR, the real estate ETF, but I kind of like XLRE. They're both fine. Last little trivia question here while I read some comments and questions. I'll give you one little trivia. Since 2008, of the 11 S&P market sectors, which one has performed the best? And it's not even close, guys. It's not even close. Percentage-wise, the best performer on that list is up over 1,000%. Some of the others aren't even close to that. So just type in what you guys think. Which of the 11 S&P sectors do you think has performed the best since 2008? While I read through this question. Let's see. Do you think buying a lagger in a strong performing ETF is a good strategy or vice versa? I'm a little nervous on that one because if you have a strong sector like energy and one of those is a real dog for right now, why is that, right? There's that phrase that says a rising tide lifts all boats. Well, if the tide's lifting, 19 out of the 20 stocks in the XLE ETF, what's wrong with that one? It makes me nervous about it. I don't have a problem buying something that's going against the pack. You just got to make sure that you have your rules in place and stop losses, because what if you're wrong and there's the price is telling you there's some legal issue or there's some accounting irregularity or something, because it should be following the index, which is exactly why you want to buy it, right, Fink? You're like, I'd like to buy it because it should return back to the pack. That's fine. It's just a little risky, and as long as you know that that's the black sheep of the bunch, fine. You just got to make sure that you have your stop losses in place, because something could be fundamentally wrong with that company and it could go down even more. All right, let me see. I've got tech. Nope. This is going to blow you away. Let's go back to my charts over here that I had up. We'll go to, and I put all of them on here, and I'm just going to, on this one, it's great because you can, down at the bottom, I think you guys can see this little slider. You can adjust this to whatever time frame you want. So let's go all the way back to 2008. Look at that. There's one market segment that is literally head and shoulders head and shoulders above the rest. Believe it or not, that's real estate, guys. Real estate is up over 1,100% since 2008. The XLRE is the symbol for that one. I always thought that was kind of interesting to look at, a unique one. So Gregory, what do you got about bicycles? I am not a cyclist. No, I'm not a cyclist. I'm thinking of going to buy a 1970s bicycle yard sale if I could find one cheap. A bicycle 28 miles a day to work. To me, being old-fashioned is more important than being fancy. Hey, tell you what, if you ride 28 miles to work every day, good on you. I know people won't even walk a mile to work. If you do, we'll put you on this list. We've been doing this since you think that the show might not be live. This is the show, what we've been doing, trying to do it every month. So everybody, not everybody, but some of the guests have been telling me what they will do every day for 1 month. So if you want to ride 28 miles every day on a bicycle, I highly encourage it. I'm hoping it's a 10-speed or not a BMX bike, so that would be the tough one. All right, what else I got? Cool, did you guys notice that? Yes, Adam says real estate investment, it's the best investment ever next to the S&P 500. Well, if you look at this, it's blowing away the S&P 500, which is crazy. And I think that just has to do with market timing, right? Because this was right in 2008. The markets were falling apart. Real estate market was already fairly depressed. So it's about market timing. But yeah, there is some just phenomenal moves here. It's interesting when we put these things into perspective and line them up with other market indexes, other charts, to kind of see what the truth is. This is one of the reasons I don't watch CNBC or Fox or Bloomberg or any of these major news networks, because I feel like they're trying to sensationalize finance. They're trying to make up stories that we want to hear or to sway us one way or another. So for me, I'd much rather just pull up charts and say, charts don't lie. Charts to me are where the truth is at. And did anybody have? I don't think anybody in here had a clue that housing, real estate, was by far the best performing sector. It's almost double the next best one, and that's just plain looking at the charts. Let's try unicycle. All right, what else did I have? There were some more questions in here. Where was that? I think I already got your question. If you guys have some, feel free to type them on in, because that was the only question I had for today was that one. I was going to build the whole show on it. John, I'm with you. John Donato says, I don't even like to drive that far, especially with the craziness that's going on around here in Southern California. I don't want to drive anywhere. 2006 when subprime markets really crashed. Yep. 2008, it caught up to the market. Yes. And this was interesting. We talked about this on previous shows, where if you look at market timing, not only on previous shows, but we talked about it in the symposium that we did on Friday. If you look at Toll Brothers, so let's do IYR. Actually, no, let's look at S&P 500. SPY. So S&P 500 is at the top. And I'm going to do Toll Brothers at the bottom. And I've shown you this one before, but I find it very interesting. We'll go to a monthly, and we'll zoom out. We can just stay right there. And then we'll go dot monthly on the bottom as well. If you look back at where the home builders all of a sudden started to fall apart, it was a couple years before which is kind of interesting for me to see that it was that far in advance. Like here's Toll Brothers at the bottom. The market started to crash where this big vertical line is going to be. So this was late 2017, markets peaked, right? That's the top chart. That's that little dashed line you see there. Let me get rid of some more lines. But you look at when the housing market peaked, at least for home builders, it was back in 2015. Or sorry, 2005, excuse me. So that's almost full 2 years before it really hit the fan for the equity markets or the housing markets. Then you look at here, let's just look at Lennar. We don't want to make it look like a one-off thing. You know, Lennar peaked back in mid-2005, but really started to fall apart in early 2007. And I think that's when that writing was starting to get on the wall there that, oh, we have a problem. How about KB Homes? KBH. Right? KB Homes really felt it much earlier. That was going back into early 2005. But, you know, lining these up, it's always interesting to see, you know, what was the trigger? What was the catalyst? And I always like to look for anticipatory factors, which could give me clues that, hey, something's going to sell off. Now, of course, I wasn't watching home builders like this thinking, oh, well, 2 years later, we're going to see a big sell-off in the equity markets. But my rules for the equity markets back in 2007 and 8 were simply percentage moves. And again, that's what got me kicked off CNBC. Bless their hearts for not letting me back. Merlin, I know it's a bit off topic, but any way to show the easiest way to create bracket orders within TradeStation? Ooh, gosh. No. There is no easy way. Bracket orders, especially in TradeStation, can be rather confusing. Maybe what I'll do, since I have no guests for the remainder of the week, at least not yet, maybe I'll spend a little bit of time talking about bracket orders and the importance of them, how to set them up. TradeStation is probably one of the more confusing ones. I hate to say it. You can simplify things with TradeStation by going into the matrix and using kind of the ladder or the dome, as I like to call it. That makes it a little bit easier for you to input those orders automatic. But again, that depends on the securities that you're trading. So maybe I'll do a separate show on that. Larry says, I don't know how to ask this. If I'm planning a trade in the SPY, should I look at the E/ES or doesn't matter? It doesn't matter. I like to look at the ES simply because that gives me after hours trading, right? So you can see the glowbacks if you're trading the futures. So I think if you're just looking at the long-term picture and saying I'd like to time myself and buy into the SPY, then just buy SPY. If you're looking more for better entries and exits, then I would be looking at the glowback. So if you're a shorter-term guy, I'd be looking at the futures on timing my SPY. But if it's long-term, I wouldn't worry about it. Because remember, that's what most retail traders are looking at is the SPY. So they're going to see all those gaps that pop up in the marketplace. CliK's a lot easier. I mean, that's one of the main things they focus on with CliK is making bracket orders exponentially easier to do. Just now, got to get live data and markets working. Let's see. What else do I got? Taco Tuesday. Yes, Larry. It's Taco Tuesday, and they have Modelo's back on special at my local place. Let's see, what else do I got? I put Toll and Lennar on my charts the other day when you went over them. Kind of interesting, right? Just to see how the markets are performing. All right. I think that's going to do it. Let me... if you got any last-minute questions, type them in. I'm going to go over your economic calendar for tomorrow because there is some interesting stuff you should be aware of. Really... The economic stuff for tomorrow is more about Canada. Brendan's not here with us today, but Canada tomorrow has their rate statement. That'll be interesting. It's not for me really what the rate announcement is. Right now it's expected to be 25 basis points, so no shocker there. What's more important is what are they going to say about inflation, right? We're seeing it here. We like to, I think our governments like to lie and candy coat things. So do governments around the world, but I'm curious to see what they say. Meaning, what does the Royal Bank of Canada say about inflation in their markets? How is it impacting their economy? Because it's going to be one of these things where I think central banks are going to be watching the next one, the next one, the next one, the next one, to see which central bank reacts first to it. Because someone's going to have to go, hey, hold on a second, inflation's getting out of control here. We might have to start raising rates quickly. When that happens, that'll be the shock to the system. So curious to see how that happens tomorrow. That announcement, as you can see on the screen here, is going to be at 7 a.m. That is, I think this is all Pacific time. Yeah, these are Pacific times. We also have crude oil inventories coming out for the U.S. as well as the 10-year bond auction at 10:01. Gotta love it. That's to the minute there, 10:01, and that's really it for economic announcements. Now tomorrow, there's only one that I'm curious to watch, and only because I think it's gonna be an absolute joke. Is GameStop reporting earnings tomorrow? Pretty sure that they're going to have a pretty, they're obviously their numbers are going to be better than expected simply because they've had so much money to buy back debt and clear their books. But are they going to be making money? probably not making much money here. To probably still be a loser. I think the last report they were down $3.30 per share on their earnings. So I don't see that getting any better. But this is going to be a favorite one for the Reddit guys, the meme stock guys. It'll be a wild one. You also have Campbell Soup reporting tomorrow. Okay, let's see. Back to the last couple questions here. Merlin, do you think now that I finally got into Bitcoin, there would be a sort of a nuclear winter with Bitcoin staying in the 40s to 20 range for a couple of years? I don't think so. I don't think you'll see it stay that long. I think what's going to happen is it's a washout. And part of the reason why I think you saw such a big move is some of the stuff that I'm building the content on for OTA is looking at things like yield farming and leverage using non-traditional exchanges, I'll call it. And the reason why I think you saw this market get so hyped up is a lot of people, what you could do is, and this is kind of the basics of yield farming, I could take, let's say, $10,000 worth of Ethereum, deposit it in an account, and then I can get interest on that, right? So let's say I get 5% interest. Well, then I pull out a loan, and on that loan, I now get a stable coin like DAI at half the amount. So if I deposit $10,000 worth of Ethereum, I can now pull out $10,000 or $5,000 worth of DAI. So let's say it's half. I take that and I do the same process. And now I take that $5,000 worth of DAI, I buy Ethereum, I put it back in the same account, get 5% interest on that, and now I can take out $2,500, boom, $1,250, boom, $625, and I just keep leveraging myself just like a bank would do with fractional reserve lending, and ultimately I can get way over leveraged. So if there's a sudden drop in the market, these guys will really get slapped around. And I think what happened is you had liquidation of a lot of people's holdings, which is fine. Get rid of that stuff. But I do think you'll see it pick back up. For the most part, most of the people that believe in it are unwavered. And, you look at the long-term picture, especially what's happening with El Salvador. Now, granted, it's El Salvador, home of MS-13, one of the most notorious gangs on earth, and the highest murder rate in the world is in El Salvador. So probably not going to be packing up ship and moving to El Salvador anytime soon, but I think it's one of the first countries to potentially use Bitcoin and digital assets as legal tender. So to me, I'm very excited to see how this all pans out, because if we do get more adoption for Bitcoin, especially on a government country level, then that $100,000 price point I made by 2023, that could happen much, much sooner. All right, let's see what else I have. I didn't check that one out in 10. Let's see. How much time have I got? All right, we can do it. We can do it. CLOV, huh? Oh, yeah, hell of a move. .D. Here's your daily on it. Yeah, this is getting lucky. This is, again, Clover Health Invest. So Clover was a SPAC, right? So Clover is that SPAC that, I forget who the original company was, but I'm pretty sure this is a SPAC that got recently transitioned into to go public. So it was a SPAC. I think that you're looking at the whole life of the SPAC. It's kind of interesting. If you look at the price chart, this hard left side is when the SPAC started and had all these wild fluctuations. And then just recently it switched over to the CLOV ticker symbol. Let's see. So yeah, I don't know. I don't touch stuff like this. When it goes parabolic and has crazy moves, it's just too crazy for me. 10 SZ. I'll call you N10 from now. Ride. Yeah. What is this? Lordstown Motors. I don't know. Crazy chart. Nothing that I'd really want to play with because it's just too choppy. There's some great downtrend stuff, but yeah, generally I don't. Is it a meme? Great. I should just need to get a meme stock account just so I can watch some of this crap that I don't need to. I don't like trading that stuff. I'd rather trade something that's stable. Let's see. Inflation crazy. Business printing paper. Yep. It's nuts. It's going to get worse and worse, right? And we'll see the Fed, I think, raise an issue on it. Chuck says, when is there going to be material release for the OTA new cryptocurrency? Yes. That will probably be... I'm trying to get everything done by mid-July. That's my goal, but I think that they're shooting for around August. So if I can get it done sooner, that'd be better. But it's really just me creating the content. And right now I'm looking at about 50 separate videos that I have to script, build, design, get all the content done. So there's going to be quite a bit of material that needs to be created for it, but that'll be pretty exciting. Tom says crypto could solve MS-13. Pretty sure that's not going to do the trick down there for MS-13. It's funny, there's actually a prison in El Salvador that is exclusively for MS-13 gang members, and the guards don't even go in the prison, they stay outside. I think that's kind of weird. Cal M's, can you please look at Facebook chart and Shopify chart for long-term opportunity? Yes, I will do that. And I'm glad you said tomorrow because I was just about to dive into it right now. But you know what? I was going to go into it, but I need to get into other stuff. So let's see. Greg says, stock market is overpriced, but you can bet on oil. There's otherwise on oil there. Otherwise, it's useless. Completely disagree with that, Greg. I think the market's overpriced, but is it utterly useless? Oh, no way. This is absolutely a vehicle to be making earnings off of, whether it's long-term, short-term, up, down, sideways, doesn't matter. So the fact that we look at something like SPY and say, hey, it's overbought, you know what? Not only is it overbought, it looks like it's going to become more overbought. This pattern that you see right now, this is strong, man. This thing looks really strong. It looks to me like it's just about to rip to the upside. If it can get a close above these most recent highs, which literally is today, boy, I really think you are going to see more upside move. Even though it seems inconceivable with inflation and all this other garbage going on. Hey, SPY looks great. Let's look at QQQ. Here's NASDAQ 100 getting its feet back on the ground. But you notice what's important, it really hasn't made a substantial new low really in the last over a year. Right? We've made some lows, but it hasn't been like a new low put in. It's just been making higher lows, and right now we're challenging those higher highs again. So there you go. Let's see, what else? Is there going to be classes for crypto or only on demand? Right now, just due to COVID, the thinking is it'll be all on demand, self-paced, and there may be some programs later on where we do, like a connected classroom type thing. Unfortunately, right now, there's only one person at OTA that has that can teach it, and that's me, and I can't leverage myself that much right now with all the other things I'm doing. So we'll be looking at getting some more instructors on board in the near future, but right now I got to build all the content out, and as you can imagine, that's a pretty tall task. All right, that's gonna do it for me. I'm gonna wrap things up here, guys. If you enjoyed it, obviously you can give me a thumbs up. I'd appreciate that. If you're new, and I see we got quite a few people here, you can hit that subscribe button. That always helps as well. You know, we do the show every day, Monday through Friday, from 2 to 3 usually. Well, it's supposed to be 2 to 2:30, but because you guys can thank Big Eb here, he's been giving me a hard time trying to get me to do an hour show, which I split the difference with you today. We made it 45 minutes, so that'll do how we do it for today's show. All right, that's all I'm going to do it for me, guys. Cal, I'll get to your Facebook and Shopify on tomorrow's show. If you got something you want me to talk about specifically tomorrow, email me, TraderMerlin@gmail.com. That's the easiest way to get those questions answered. So send them on in. Take care, everybody. I will see you mañana.